All right, welcome back. This is a breaking news story at this time. Overseas school fees and medical tourism have been removed from the accessing FOREX from the interbank foreign exchange window. Immediate currency reaction shows that the dollar has gone to as low, or has fallen to as low as 325 naira to the dollar, while the pound is trading at 450 naira. Just yesterday, at a debate on whether or not the naira should be devalued, the governor of Edo State, Adams Oshomole, talked about the fact that the 41 items should have an addition, 2 more to it, and that's education and medical tourism should be added to it. If you have to access FOREX for those, you should go to an alternative source and not go to the official window, which has continued to put pressure on the Central Bank of Nigeria. As at June, or rather as at January, external reserves stood at $28 billion, and it seems it's dropping because the Central Bank of Nigeria has continued to put pressure on the external reserves in its bid to ease pressure of the naira. Let's bring in Tilewa Adebajo to take a look at this and some other issues that have come up with regards the economy in the last couple of days. Good morning to you, Tilewa Adebajo. Tilewa is an economic policy analyst. Thank you for coming on the show this morning.
Good morning, Harriet. How are you?
I'm very well, thank you. And I'm kind of electrified, especially considering that on Monday, I was a little bit tepid. I was like those investors hugging the sideline and watching everything unfold during the week. But from yesterday to today, it's been an electrifying moment for me. I don't know if it's an electrifying moment for you. Looking at this new, this recent announcement now, removing overseas school fees and medical tourism from the IFM window in the days.
Harriet, one of the things I'd like you to do first of all is that can you confirm the source of this information?
No, the Central Bank of Nigeria.
The Central Bank, it's confirmed. Well, you see, the problems we have in this country has to do with policy articulation. Yesterday, there was a governor, Oshiomhole from Edo State, making a pronouncement on foreign exchange. I don't know if the governor has now become the spokesman for the Central Bank. And then all of a sudden, the Central Bank issues a statement. There hasn't been any follow-ups. We haven't had the chance to talk to anybody in the Central Bank. And that is why I'm trying desperately to confirm the source of this information so that I can be able to comment on this authoritatively. However, let us understand what this is causing in the markets. As you rightly said, the parallel market has reacted, and all of a sudden, from about 313 in the beginning of the week, the naira has gone to over 325 in the parallel market. You see, this sort of irresponsibility is what causes volatility in the markets. You make ad hoc pronouncements that are not related to any issues at all. You have a list that you've come up with of prohibited items, and when is it going to end?
When the pressure on the naira stops.
It doesn't work that way. We're serious people. You don't manage your currency in this manner. You have to come out with a clear policy and stick with it for a period of time to put stability into that market. People talk about devaluation. My own attitude to devaluation has been, okay, fine, we want to devalue. The question now is that oil is at $30 a barrel and we want to devalue the naira. When oil was trading at $120 a barrel, why did the naira not go back to under 100 naira to a dollar? Why did it not go there? So there's a lot of distortions in this foreign exchange market, and there's a lot of volatility. And the central bank should not fuel this, because tomorrow another minister might make a statement, and the next thing we'll find out the central bank has issued another policy.
So what are you saying, that the central bank is not independent in making its decisions, and instead is listening to policymakers or decision makers' comments or statements before going ahead to announce policies?
A policy is something that you announce and you give it time to work so that it can be stable. If you change your policy every week, then it brings some sort of uncertainty into the markets. And that is what we're facing. We want to remove speculation, we want to remove volatility, because people are uncertain about this foreign exchange policy. That's why I ask you a question, where does it end? You cannot say it's going to end when there's an issue on the press. So what's going to happen next week? The manufacturers who want to access that market, how would they be able to access that market? So what's going to be, tell me what's going to happen next week? Who is going to be off the list next week? So if you feel that you do not have money to support the currency anymore, then do what you have to do. There are clear methods of mechanism of bringing the foreign exchange market into equilibrium. Remove the distortions, remove the volatility, provide certainty of policy to the financial markets, and let the Naira find its level.
So in the Naira finding its level now, we know that the CEO of the enterprise called Nigeria has said no plans to devalue. So let's move away from talking about devaluation. It seems as if it's a broken record right now. The president has said we're not devaluing.
Exactly.
So let's look for another way for which we can turn our attention. So no devaluation. What next?
Exactly. That's the issue. Put stability. If you have a market that you're trading, put stability into that market. Let's know who can participate and who cannot participate. And then let everybody find their level. The president has said, these are my dollars here, and these dollars here are for this particular purpose, and we're not going to devalue it. Fair enough. These are the rules that guide access to these dollars. If you continue to change those rules every week, then everybody becomes uncertain.
So how about changing the rules, for instance, on the trade, industrial, and investment policies? If we change the rules on that one, might we begin to see an easing in the economy and maybe see more exports?
Fair enough. You've raised a valid point. And that is where we're going in terms of looking at things that are happening. Now, you've said the week was, we had seen in the beginning of the week the articulation by the finance minister on the direction of the economy, the policy, what they were trying to do and how they were trying to create this. We had seen a lot of the activities within the TSA account, and clearly the government was making a lot of progress in terms of achieving fiscal discipline. And I think this has been articulated by the fact that we now have 2.2 trillion in the TSA. So there have been remarkable success in that area. Now, to be able to conclude that process of achieving fiscal discipline, the only thing that was necessary was to pass the budget. Now, the budget has gone through a very good scrutiny. We've now said, look, this budget is padded, we don't think it's right, and it's good. It's a positive development. The ministers signed off on this budget, and I mean, a minister like Fashola, of Fashola's caliber, and also in Fayemi's ministry, they said there was about 789 million for upgrade of website. And I'm sure a minister of his own caliber would not sign off on something like that. A minister of Fashola's caliber would not sign off on 5 billion to build ministerial quarters, because we all know that they don't build quarters for ministers anymore. Everything has been monetized. So what happened that all these things now got to the National Assembly without the minister's knowledge? So that is something they now have to go back and sort out and represent.
But then do you think that in light of what has come up,
yes,
that the president might withdraw this budget and probably put another one forward?
It's a budget process it's a process. They've gotten all the feedback, and of course the presidency itself said they welcome the criticism. So now let them look at what has been done. The Minister of Budget has met with the National Assembly representatives. They'll all go back to the drawing board and let all the ministers sign off on their budgets properly, and they'll represent. And then they'll go back to the defense. It's a positive development. Now that has been done, we're now looking at how do we resolve the monetary side. The fiscal side, I think, is becoming very clear. So, but if you do not put in place the right monetary policies, then we're going to run into problem. The foreign exchange is one problem there. The second problem we have now is that the rate of inflation is now close to 10%, and the MRR is 11%. So that means that there's only 100 basis points between the inflation rate and the MRR. So in terms of investments, we might soon be losing value. So those are issues that are clear. And the important point that you raised, Harriet, was that all these things now have to fit into the right trade, investment, policies, and industrial policies also, because most of these companies, if you say you want to approach with an export-led import substitution strategy, then the exporters or the people that want to invest in exports need to bring in equipment.
And then just today, the non-oil exporters queried the outstanding debt of 109 billion naira owed them, especially since the central bank is still talking about 300 billion naira special intervention fund. So with this kind of issues on ground, do you think, for instance, that we can see any easing of or encouraging of more non-oil exports? Because that's the aspect of the economy we're trying to look at to boost the economy.
Exactly. You're saying that you have foreign exchange that is scarce in supply because oil has gone down. So can we not look at boosting our exports to be able to bring in more foreign exchange? So the central bank also has to come up with a clear policy that will stimulate and encourage exports.
Of that's non-oil exports.
Exactly, non-oil exports, because we're saying from the oil, because of the low oil price, the dollars we're bringing in. So if you start to export significantly, then in another year or two, you can begin to see an increase in your export proceeds. And besides, 20 billion, what is the real demand for foreign exchange in Nigeria? Because aside from the monies from the central bank, we have $20 billion that comes in from remittances every year. So where is that money? It's not from the central bank. That's in the interbank and the parallel market.
So going forward for you now, talking about incentives, what kind of incentives should we be looking at to encourage more import substitution and, of course, compensate those who would want to go into the market?
Well, first of all, where the president has said that people are importing toothpick. Okay, so if you don't want people to import toothpick, and so where is the equipment to make the toothpick? So if we put in policies to give it the toothpick importer, it's a very simple analysis. You give him zero duty on his equipment, let him bring him, and let him start making the toothpick here with the local materials here, selling it to the local market, and if he has the capacity, he can sell it to export. We have export promotion agencies, we have an export-import bank, we have all those structures on ground. So we really need to redefine that export policy, because that is what is going to bring in more dollars into the system, non-oil exports. So it's a question of policy, industrial policy, trade policy, and investment policy. Those are the things that are required now to be able to boost the supply. But we have not seen that articulation yet. And if that sector is complaining, then I think it's important that they address the issues that have been raised by those guys to be able to give them the incentives they need to stimulate exports.
Well, in the days ahead, we hope that that will happen. But thank you so much, Tiliwa, for coming on the program this morning and sharing your perspectives with us.
Thank you very much, Harriet.